And we are connected actually, Anup.
Yes, we are. We are on
We are
LinkedIn.
connected.
Yes, we are.
Yeah,
Yeah.
good to know.
But LinkedIn is one of those things where, yeah, you can get so many people and then, but it's great. It's great. We are together on this panel. Later on, we can have a bit of a chat as well.
Certainly.
Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 UAE time on September 5th, and the end of the week, a week in which we've seen a lot of noise regarding the outlook for Fed rate cuts, the big parade in China, and the ongoing Russia's war in Ukraine, with Brent crude oil looking softer at the end of the week, trading this morning in Asian trade at 66.80, down about 0.5%, and generally on the week down, touched 69 above $69 on at the start of the week, and now ending the week nearly $3 below that. Let's start off. It's great to have this panel this morning. Some of our longtime commentators, but some of which haven't been with us for a while. And I want to start with Daniel Rahmat, a senior energy security consultant in Iran. Of course, Daniel, based in Tehran, hasn't been with us since before the Israel's attack war on Iran in June. And so it's a unique opportunity to say hi, Daniel. Thank God you're great and you're there, and all is well, so to speak. Most importantly, but let's just talk a little bit, because OPEC Plus are meeting this weekend, and in their calculations, at the end of a current increase cycle, they've been increasing supply over the last 6 months since before the conflict in June, but now they're apparently considering yet even more increases. And I suppose one thing they'll want to know, amongst the long list of things they might look at over the weekend, is Iran able to export all of the oil it was able to export in the Biden era, in the Trump era, as Trump clamps down on India and other places? Will it finally a vice grip come around Iranian oil exports? Tell us a little bit about how Iran is doing a few months after the war in June, and particularly in relation to Iran's ability to export oil.
Hello, Sean, and hello, everybody. I'm very glad to be here again. And yeah, regarding Iran's production capability, there are two different things, of course, production increase or production capability, and export capacity and the volume of exports. As you know, now almost all Iranian barrels go to China. Um, Iranian production has not has not met the goals and has not increased as the government and the Ministry of Petroleum had promised already. And there are some technical problems with the increasing the production, despite the claims that the ministry is making, that they're working very hard to increase the production. Apparently, they have faced some technical problems that would stop them increasing the number of barrels. On the other side, exporting these such amount of oil has faced some different kinds of problems, including the concerns during the Iran-Israel war that ended up in actually flooding some part, and actually the floating storages with huge amounts of oil. And just after that, the exports declined. There are different problems, as I said, technical problems, sanction problems on Chinese refineries and the shadow fleet, and also to the shadow banking system, and which has made the Chinese refineries very concerned about it. And in the long-term prospect, let's say the possibility of return, very serious possibility of the return of the UN sanctions on Iran, despite the disagreements from China and Russia on the legitimacy of the European powers to trigger the snapback option, which takes back all UN sanctions on Iran. These are very serious concerns that would possibly even let the foreign forces, including the American Navy, to stop Iranian tankers actually
But
going
at
to
this point, 6
Oh.
months or so, 5 months, a few months after the war in June, Iranian oil exports continue at the level they did prior to the war. Is that correct?
No. The volume of Iranian oil departures is the same level, almost, a little bit less, but the volume of deliveries to Chinese refiners have declined significantly, let's say. We can understand that from the huge amount of Iranian floating reserves in Malaysian and Indonesian waters. So there are problems with delivering Iranian oil to the Chinese refiners. Let's say something about 35 to 40% decline in some months as were cited.
So the
We
oil is
cannot-
leaving Iran, but it's not
Yes.
arriving in China because the Chinese are becoming increasingly sensitive to the sanctioned barrels, to the dark fleet. Let's go to Singapore to Anoop Singh, Global Head of Shipping Research at Oil Brokerage. Anoop, we started the year with the exiting Biden administration putting a big squeeze, an additional layer of squeeze, if you like, onto the shadow fleet, the dark fleet, those vessels around the world that operate outside of the sort of norms of the rules of the high seas and flagging and all sorts of other things. And that was going to maybe constrict the oil flow in the world. Now, 6-8 months later, with the Iran story, where are we at with the world's ability or willingness to constrict and limit the dark fleet?
We haven't seen a major impact, despite a sustained impact from the actions that are sporadic in nature, and therefore the impact is also sporadic. Very early on in Jan this year, when the first round of sanctions against Chinese refiners and banking system were introduced by the outgoing Biden administration, that's when the disruption was at its peak. Thereafter, most operators have adapted to using workarounds and finding ways to use the dark fleet. As a matter of fact, if anything, the dark fleet is richer in ships. The dark fleet associated with the Iranian trade is actually richer in ships than it was beforehand.
Sorry, it's what with ships?
Before the war. Yeah.
I didn't catch what
So
you
there are
said
more
there.
ships. There's more ships.
There's
said
more.
There are more
It's-
ships. Yeah, it's
Right,
richer.
okay.
There are more ships. There are almost 18 to 20 more VLCCs, which have the mainstream trading vessels and other carrying Iranian cargoes. To some extent, what Daniel was saying sort of explains it, because there's much more oil in floating storage. So departing out of Iran on trend, but not all of it is going into China. Now, some of the stories around why China is not taking all of the barrels in is because of repeated sanctioning by the Trump administration. So he comes in, he finds a port that his administration wants to target, and they create a scale around that port, and the ships hold back. But on a sustained basis, there's the up and down. There's much more variability, volatility that go. But overall, our trend so far suggests that our sort of watch is that there is actually a little bit more oil now going from Iran into China. Yes, it's more volatile. There are periods of time when we find more floating storage building up, but it's variable. So the number of ships going into the dark fleet has gone up. There's some disruptions, increasing disruptions. Are the teapots necessarily shying away from Iranian oil? it's hard to make a very firm case on that. I don't think they are. Yeah.
Maybe the discount just isn't great enough. You know, they love their cheap oil, and maybe that's
yeah. Well, it's not great enough, but then it's still better than getting full priced oil or Russian oil, right? So yeah.
Well, let's go to the Baltics. Dr. Andrei Belyi, professor, founder, and CEO of Balsan, sitting on another critical waterway like you are, Anup, in Singapore, in the South China Sea, and so forth. Dr. Andrei obviously sits in the Baltic, and the oil flows out of Russia. But, Doctor, I wanted to get your views on where demand is at. You know, we have a big news item today, the U.S. jobs market report, the monthly report on the month before about amount of jobs created in the U.S. Economy. And the general expectation has been reported that it's going to be another weak number, which is going to open the gates for the U.S. Federal Reserve to start cutting rates again. And of course, the financial markets, particularly the equity markets, have been really excited about that. They love nothing more to hear that somebody's lost their job in order for their stocks to go up. But also today, before this news now, the actual announcement in the US comes out, and it seems everybody knows already what the data point is, that the US jobs number is going to be weak. And I thought it was a confidential data point. But nonetheless, we have the German data point this morning that the German economy shrank in the second quarter, but unexpectedly by 0.3%. So my question to you is, will energy markets be more focused on this slowing economic narrative, which is, of course, problematic to less demand for energy, or will the energy markets be focused on lower price of money as the Fed cuts rates and the ECB cuts rates? Where do you think the energy markets are looking, are followed by between those two choices?
Well, I would say the US Federal Reserve actions are more on the short term span, while the decline in economics is more general, is more structural. We have seen almost 1.5% of oil demand decline in Germany alone since 2024, basically. Yeah, and well, considering that it's a very large economy, it's quite a big number. And across the European Union, we see also that oil demand somehow peaked in 2022, and since then is on the decline path. Considering a declining industrial output, considering declining refinery output, we may expect a further decline in crude oil consumption, but the oil product consumption may remain the same. Hence, geopolitical implications, including dependence on India, for example, who is accelerating the oil refinery capacity.
And what about, does that reflect similarly on gas, natural gas? We've seen the Europeans make a massive commitment to the United States on importing huge volumes of LNG in the coming years, already are doing so, but even greater volumes in the out year. Where does this economic outlook align with that kind of commitment the Europeans have made to the US?
Well, in my mind, and in the mind of many of those who follow the gas markets, these proposals are rather political and more or less voluntarily, because they do not match the real energy demand in Europe, including gas demand. So it's basically committing to the transatlantic relations politically, but economically, I don't see how the European Union can absorb so much of LNG, and that basically raises a lot of questions about the compatibility between what the political world decides and wants and what the markets are offering. And there are a lot of questions indeed.
Daniel, just circling back to where we're at in the region a few months after this unprecedented face-off between Israel and Iran. Obviously, Israel attacked Iran, and the US then bombed Iran, and Iran responded and defended itself. But ultimately, from Iran's perspective, do you think, and from Tehran's point of view, is this now over? We had 2 skirmishes last year, which seemed to be fairly choreographed, more theater than reality. This year looked pretty real, and obviously the impact was pretty real in the ground there in Iran for all of you. Where are we at now? Does this feel like it's over, or is this a pause, or what's your own sense of where the regional positioning is?
I'd definitely say that, at least on the Israeli side, Benjamin Netanyahu's side, it's not over, and he would very much prefer to escalate the tensions and the war, and his priority would be to drag the US into a full-scale all-out war with Iran, because the war in June already proved that Israelis are very actually vulnerable against Iran's missile attacks on their cities and on their infrastructure. So they would not be able to manage it alone, and Benjamin Netanyahu is very much willing to restart the war and take Americans in the middle of this war, maybe even from the very beginning of the next possible wave of Israeli attacks on Iran. But at the same time, there are a lot of other, let's say, trends and activities going on, both in Iran's domestic politics, which the reformist government is trying to take the control of the whole value chain, let's say the whole trade chain of oil, and to manage the money coming back to the country. There are very serious fights between the actually the oil exporting and oil and money, let's call it the shadow banking system, which takes the money back to the country, which is still under the control of the hardliners, with the government, which is a very serious sign of real changes inside Iran. At the same time, there is a very significant confusion regarding Iran's actually goals in any kind of possible talks with the Americans or Westerns in general, and as I said before, very high risk of snapback activation and taking all the sanctions against Iran. So this is a very, very confusing and chaotic scene we are facing right now. But in terms of the war, the risk of the war is very high, and this time, most possibly, Benjamin Netanyahu cannot survive if he cannot succeed to finish or to accomplish his mission against Iran.
Or to be just in a
balkanize the whole
constant
region.
state of war. I mean, that seems to be his only policy at the moment. Anoop, looking at the sort of bigger picture of what we were talking about earlier, obviously the Iranian barrels not getting into China, whether that's because of greater sensitivity to sanctions in certain the teapots or certain elements of China. But of course, the big news has been on India, not China. Donald Trump, as you say in your earlier comments, every week seems to turn his focus to another micro target, and that becomes the sort of plat du jour, the meal of the day. And India is clearly the meal of the day at the moment. Are we seeing anything in the shipping lanes that would indicate that Indian refiners are getting a little bit nervous like the Chinese ones were? Or how do you see that playing out?
Let me first speak a little bit to the question that you had asked, Andre, because on the shipping side in Europe, we're seeing a very different picture. Right? For instance, and demand is a very difficult animal to measure in real time. Yes, economy in Germany might have shrunk 0.3% unexpectedly. At the same time, if you look at European PMIs, For the first time since September 2022, PMIs are above 50. Industrial output year on year is higher, right? So, and I think those are difficult to explain trends on the face of it. But if you look at things like rearmament of Europe, the ECB having cut rates well before the Fed did. So those are some of the positive factors. I think so. It's a mixed picture. Certainly from a freight standpoint, we see Europe buying a lot more, having to buy a lot more diesel through this summer, a lot more jet fuel through this summer. So to
Demand
us,
was high. I think the highest ever for jet fuel.
jet fuel, absolutely. Imports for diesel through the roof, diesel cracks going through the roof. So it's not a given, and certainly not completely translatable from a slowdown in economy to a direct slowdown in energy demand. As a matter of fact, gasoline demand in all of Europe is 5% up year to date. So
I think these
I'm
are
not-
data points that OPEC Plus will be looking close at as they consider putting more oil on the market. As we go into obviously a higher demand period of the year.
Yeah, on India.
Yeah, India. Yeah.
On India, we so 3rd September was a line in the sand, right? EU sanctions, EU's new price cap mechanism kicked in, and you can't buy Russian crude if it isn't priced more than $47.6 a barrel or three, whatever the number was. So far, that has not made any difference to the acceptability from our standpoint, from our viewpoint. We don't think much has changed. But through July and August, when the rhetoric against India buying Russian crude was at its peak, we did see Indian state refiners give up about 300,000 to 400,000 barrels a day of Russian crude. Now, all of that sort of found a ready home in China, and that was great for tanker markets, long haul flows and everything. But increasingly, we are seeing unless there is serious policy change on the Indian side, we don't see anything on the ground which suggests to us that the private refiners or the state refiners are any less interested in Russian crude.
And surely they haven't been directed from the government of India to back away. So if the price is still right, they'll be buying. That would seem to be at least what the market thinks, and that's clearly what the Indian political leadership is saying. And we'll have to watch that closely, because of course I think another thing which OPEC Plus will be watching as they make their decision this weekend is will India back off and leave a greater opportunity for perhaps others. But of course Russia is an OPEC Plus country. Dr. Bellier, I wanted to get your thoughts. Obviously, there's been a lot of talk recently about the war in Ukraine and whether that's coming to an end or not coming to an end. And the Europeans seem to be, even my little country, Ireland, announced yesterday that they will be willing to put soldiers on the ground in a peace mission type of thing, of which Ireland contributes to many UN missions around the world. From a European perspective, do you think there is something notable gathering here, or is this just a lot more noise like sanctions round 17 or 75 and really nothing's changing?
It is difficult to say. I would not comment on neither side, because one needs to see decisions by major European countries like France and the United Kingdom. And indeed, there are concerns, security concerns regarding a larger regional war which would bypass the Ukrainian conflict. And therefore, some European policymakers would like to be tougher on the issue.
From the point of view of what might be putting pressure on either side, obviously Europe has gone to, and as we said in our earlier point, committed to purchase large amounts of energy from the US. On the Russian side, a few years into this conflict and sanctions and so forth, how challenged is the energy infrastructure in Russia? Now, gas infrastructure, gas fields, they've oil still flowing, but is there any potential pressure coming, do you think, from the fact that these reservoirs, these oil and gas fields might be under duress, lacking maintenance? Or what is your thoughts on that energy infrastructure in Russia putting any pressure on the government to resolve this?
From oil and gas side, well, there is no, well, at least we don't have information on any possibility to change the course internally in Russia, but the difficulties indeed exist in the upstream sector of Russia. But again, as most of the information is classified, we don't have much of the access to it. And I'd like to just comment to the previous intervention. Indeed, yes, economic decline does not result in Europe in oil products demand decline, but clearly in the crude oil decline, partly because the refining capacities are getting lost. By contrast, in India, they're increasing. So logically, there are more oil products that come from India to Europe. And
because refining capacity in Europe is declining all the time.
Declining. Exactly, and that's a very significant trend that will affect both geopolitics and energy markets, and we will see also some new developments in Europe related to this. And obviously, the dependence on Russia is a significant factor. It has been declining mostly because there are some willingness to decrease or to phase out Russian oil and gas, but the rates are slower than expected, and very often is the Russian side who is actually promises, or like say foresees a decline in output, and that's actually we have to see it structurally. It's very often energy markets don't follow political decisions, and sometimes there are coincidences, and these coincidences are mostly
well, it seems as we were
factors.
talking earlier in the week, the one thing energy markets are following a lot of these days is purely liquidity, the amount of money in the market. Let's go to the survey question and then sort of wrap up with getting each of your views on what you think OPEC Plus will do this weekend. The question is on the news of today, later today, the US jobs report will come out for August. And as I said in my opening comments, the expectation is clearly very strong in the markets that it's going to be a weak number. How weak is really the debate? Will it be weak enough for just for one cut and then one and done? Or is it going to be open the floodgates for the Fed to do a kind of a whole series of cuts and where the markets will react? So my question is, what will have a greater impact on oil markets from outcome of today's US jobs report? Fed rate cuts? Or, as we were talking earlier, will it signal the fact that the jobs report is so bad? Well, that's bad because there's no jobs being created, and no jobs are being created because that's poor economic performance. So that's less energy demand. So which of these two, or neither, will the oil markets have the bigger impact? It would appear, Daniel, that since this news broke the other day that OPEC Plus was looking at another increase, oil prices have already started falling and have fallen a few dollars since that first report. But quickly, Daniel, your thoughts on what OPEC will do, should do at this point?
As Anup said, the economic growth and the oil demand do not necessarily comply with each other. It means that at the moment we're witnessing increasing oil demand, jet fuel demand, gasoline demand here or there, and which is not happening in parallel with an economic growth. That's one of the points that OPEC is considering, and that would somehow pave the way for even more barrels to get into the market. At the same time, I was just reading the quotas of the Saudis' oil allocation to the Chinese market, which is going to decrease significantly for China. So that in September, that would pave the way, open the way for Iranian and Russian oil to find the markets in China. So I think at this moment there is enough demand for the oil, and considering Iran's incapability for increasing its oil production, while the other members have some capacity, we should be waiting for even, let's say, I cannot say huge amounts of more barrels, but more barrels will be added to the market. This is my assumption.
Anup, your thoughts on the OPEC Plus decision this weekend? As I said, we've seen oil prices drop back from the $69 they hit on Tuesday to close out today. Well, they're still trading, but down $2 or $3. Your thoughts on the decision they should make?
They are projecting oil demand growth next year to be twice as much as the IEA is again, right? And interestingly, they are anticipating even the OECD countries to add 220,000 barrels per day of demand. So if they stick to their own analysis, then I imagine the path is to carry on introducing more oil into the market.
Yeah, it might be the window to do it, given we are going into the winter. Last word to you, Dr. Belli, on this topic.
Thanks. Yeah, it's very difficult to foresee anything, because it's a very complex interlink between various economic and geopolitical trends. Yeah, and we saw that some political decisions can have a harmful, pernicious effect on economic developments, and that also includes various conflicts, be it in Ukraine, Middle East, or be it trade tensions that arose. So we are indeed in a very, very complex situation. So I would not dare to kind of assume that then there is this or that trend. But of course, there is a oil demand overall globally will increase mostly due to non-OECD economies, which have already saw an increase of oil demand by 30% over the last decade. And that's actually quite an impressive figure. And by contrast, the old world, which includes the United States, European continent, and Russia, will see a decline in economic growth, and low change in center periphery in global economy is occurring, and then we have to analyze each time what's going on in accordance to this change.
It's certainly a window of time. I mean, we've seen over recent months OPEC Plus not only surprised at the beginning that they were going to start increasing into a week window, but then they doubled down and they tripled the rate and speed in which they increased progressively over those number of months. So the response to the survey here, slower economic growth, the oil markets will be focused on. But this is a unique window. If OPEC Plus want to increase, put more oil back in the markets, the window of going into the period of highest demand of the year would seem the time to do it. It might be the last window for some time, because then you're talking about the new year and the weaker first quarter, which is always the weakest of the cycle of the 12-month year. So my sense is OPEC Plus might keep marching on this increase. But of course, who can increase? That's the question, right? So maybe those might be, we heard Russia saying, no increases, because maybe they cannot increase anymore. And many of them can. So that's kind of part of the fudginess of all of this. But listen, we've got to get on with work. Anup needs to get back to his day job. Anup Singh, thank you so much from Singapore. I'll be there next week. Really looking forward to APEC. Daniel Rahmat in Tehran. Great to see you back, Daniel. And also Dr. Andre Belli, thank you so much there in the Baltics, keeping an eye on everything. Really appreciate your time today, Dr. Andre. Have a great weekend, everybody. Oil prices trading down on the week. Will all the traders in Singapore next week manage to uplift the mood, or will they consolidate the downward mood as they did last year? We went into Singapore, prices fell during the week. Let's see what happens next week. All the best. Have a great weekend.
Thank you.
Okay. Bye-bye.